I'll keep laughing, you've got nothing. I'll keep hustling.
Hi guys, how are you guys doing? We've been away. We took a little bit of a long weekend break. So finally, what the hell is happening with Bitcoin? I have to say, going away, and let me maybe move this mic a little bit closer. I do apologize for the hard noises. Going away is probably going to be, I don't know, it's the curse. When there's always some sort of a conference, Bitcoin use seems to dump around those type of events, or when you go away. I don't know if it feels the same for you, but it's normally when you're not looking, that's when the next big move appears. So today we're going to be talking about Bitcoin in a shorter termish look. We're going to be looking at the FOMC, as well as a few other things that I want to bring your way. If you want me to have a look at an alt other than the ones listed on the screen, more than welcome to drop me a comment, and we can see if there's time at the end of the stream for me to bring up that alt. All right, so as for everybody else, our hardcore regulars are here. Lee is still away for a while. He's busy working on some not to be disclosed magic at the back end, and looking forward for him coming back as well. So maybe come Wednesday, tomorrow or Thursday, he might be back. I also see Matty is throwing in his hand saying we must look at flux. I will definitely see if I can try and get our hands on flux for you today. Okay, so before we do that, let's talk BTC. So we had a massive shakeout. And for those that are maybe new to this, a shakeout is when we have these Darth Maul looking type candles, meaning Bitcoin literally rallied like crazy from 27.2 all the way to 30,000, and then all the way back down in that one day, and to complete this journey again the next day. So that's a crazy shakeout. So better explaining it might be Tian's thoughts of going away in May. Sell in May and go away. So we had this crazy day. And why this normally would happen, guys, is purely because what we're experiencing around this move is when it's fast, I normally always say this, it won't last. And when it's slow, leave it, let it grow. And when you have a move like this, basically this was the accumulation of everybody shorting and feeling their geniuses, getting in on this at different times, and them having to get out of the move. And that's what really brought price up. So for today, I want to quickly look at a few things. When will the trend resume? Should we continue on being bearish? Is this a buy zone? All those things. So I'm going to quickly show a few narratives around that. The best way to probably do this is to have a look at a few things. And what I mean by that is look at what our opponents are looking at. So first things first, let's maybe do it like this. I'm going to bring on the moving averages. So this is a moving average template that I've got loaded, and I'm going to go over to the daily. Now, what do I want to see? I want to see whether my opponents are going to want to buy BTC on a daily and on a weekly time frame. And that's important because a lot of people use these averages to try and see whether the trend is turning, whether they need to be entering, and so forth and so forth. So looking at this, what I want to see is that's the 20, that's the 50. I'm interested in the 200. So maybe what I'm going to do is just going to bring up the 200 moving average. And what I will do is just make sure that the color is nice and thick. So there's the 200 moving average for BTC. This is now me not using the original chart that I was doing this on. So it's no 200 on BTC on OKX. So let me just get a BTC on Binance. That's going to be a better one. So bringing up the 200 moving average, what you will see is that most people are going to be looking at price. This is yet again a perpetuals chart. I do apologize, guys. I should have checked my stuff before I went live. Okay, there we go. This one will work. Finally. Okay, so looking at this, what we have is people are going to be waiting and expecting price to test this moving average. So we're sitting in a situation where a lot of people are paralyzed And retail, our biggest opponents, are sitting in the market and sitting on the side saying, okay, maybe we'll buy 26. And that brings us back to the original analysis. So what I'm going to do is I'm going to look at the 4 hour. And I'm going to tell you why I'm thinking that for price to go and get new interest, for a trend to maybe turn, the argument is we would need to see some sort of a shakeout as such. So if you look at price action from this point of view, and I'm just going to switch off the moving averages because I, just for to make the screen nice and clean, you can see that what price does is it moves in phases or in blocks, lateral ranges. And when it accelerates, it always halts, creates a new lateral range, accelerates, creates a new lateral range. These areas give you gaps. Now, these gaps, in the simplest way, is normally when price goes and revisits. It visits these gaps because there's an inefficiency in the way that price moves, and then it continues. So what's true for here will be true from the bearish narrative. So what did we do? We moved away quickly. There's a gap. Price goes and fills the gap. We moved away too quickly. There's a gap. Price goes and fills the gap. Okay, we fell down too quickly. There's a gap. Price goes and fills the gap. So it makes it very easy for us to try and know when is the right time to trade. So if we look at this from this point of view, Bitcoin at this stage, where does it want to go attention to? Is that area there? There's a gap. So price would want to go there. That coincidentally is where the 200 moving average is sitting at on the weekly. And ultimately, what else do we have? We've got that gap there. So there's my second place. So the argument that I have for myself, if I'm looking at the way that the price is moving and what I want to see for Bitcoin, it is very simple. Smart money or smart people are going to want to try and buy this area here. There's a lot of confluence around that area, that 25.5 area, me including been screaming that's where we need to go long. And the long that I took at around 27 was basically just a hold off phase because I wanted to short again at 29.6. So we went to 29.7, 30,000. So that area really got tested. The problem that I have with that was, though, is that from a bearish point of view, it almost looked like it was turning bullish. That being said, I'm thinking that the way that the market is going to move and the way that the RSI is going to come into picture, and let me quickly load an RSI for you guys. If we look at how price is printing at this stage, this can be considered, and I'm just going to switch us back to the daily. This can be considered as a typical pivot point when price really got overextended. So if you want to hunt a divergence, and the divergence we're looking for continuation, this is the divergence we need for another push to the upside. That sell in May, go away targets we've been talking about, which kind of from where we are now doesn't really feel like it's realistically possible. But what we would want to see in the market for that to play out is something that would give us a situation where price enters the buy zone, be it this buy zone or be it the lower one, 23,000. Meaning that all these smart people that's now believing in the 25K as a possibility, looking at the way price is moving, maybe they also need to get punished and price needs to go to the 23 level. But what I would want to see now is, irrespective now if you're going here, phase A, or there, plan B, I would want to see the RSI go below that low. Simple as that. So all you need to do, if you want to try and look for that next long-term big picture buy, is just to see, wait, where the price is going to go to one of these areas, and you want to see a hidden bullish divergence. So I've basically given you everything that you need to look for. Simple as that. So if you find value in the video, please hit the like button. I do need the likes. Otherwise, I don't know why I'm doing this or whether I'm doing it right and whether it's helpful for you guys. Also take some time to just subscribe if you're new to the channel so that you can find more updates as we go live. And for those that are regulars, know that the video is brought to you through PrimeXBT. PrimeXBT is one of our channel sponsors, and you can actually follow my trades through the Copytrade. All you need to do is head over to the Discord, and the link to the Discord is this one over here, popping on the right-hand side of the screen. Scan it in there. In the Discord, there's a channel where you can actually just go and verify your access. So verify your sponsorship access. And this will give you everything you would need to know to how to follow the Copytrade account, what it is we're doing, and so forth and so forth. So you're more than welcome to do that. Later on today, I am going to open, this is the PPE Copytrade account. There's the short we took on this account, and there's the long. So we've been buying in all the right areas. So later on today, I'm going to be telling you guys what my plan is for the remainder, because this position now needs to realize some really good swing gains. And at this stage, we kind of offset both against each other. So a choice needs to be made so that when we have that long run, we can really bank in some big bucks. So stay tuned for that as we go on. Right. Let's go on. Let's talk about the FOMC. I want to talk FOMC with you guys. So that being said, tomorrow is going to be a big day for us. We've got the FOMC fund rate, the FOMC statement. And why is this a big deal? Well, simply put, the Fed is trying to raise the rates in order to cool down the inflation that the US economy is experiencing. So we were sitting at a 9.1, which was kind of a record-creating inflation off the back of the COVID pandemic that was around. Now, the idea is keep raising the rates, making it more expensive for you to borrow money, meaning it makes it harder for new people to invest in the economy. It's more pricey and vice versa. And subsequently, it's going to force people from raising the rates of basic goods and making life more expensive for the average Joe public. And as you can see, what they've done is they've managed to succeed in just that. So we've had the big debate. Were we in recession? Weren't we in a recession? All that, the whole through last year. But the reality is at this stage, the rate is coming down. And this brings us to the next big question. Are we going to have another funds rate raise tomorrow? So people are speculating that they're going to raise the rates again. And at this stage, the betting man is saying that there's going to be a 90% chance of that. Now, why is this important? Well, simply put, we would want to try and time our entrance into this market from a short point of view around when the Fed pivots, meaning when the Fed stops raising these rates. So what normally happens is if we look at the market and we look at the S&P 500, every time we had the markets go into this overheated condition that we had and the inflation got out of hand, we had a scenario where only once the Fed changes its policy from increasing the interest rates to decreasing or pivoting, that's only when the real recession and the real correction in the stock market occurs. And if you look at this from 1969 onwards, every time that happens, that's only when the real punishment plays in. So although we might be looking at some corrections, the real punishment question is when and where. So looking at this S&P 500 at this stage, is this the top? Is this the real correction? That is a big question. So that's a loaded argument that we need to keep an eye out for tomorrow. So if you want to be trading leverage and you want to be trading small time frames, just consider this time frame tomorrow, because that would be the same equivalent as BTC on the daily or on the 4 hour like we just had, giving you a big Darth Maul shakeout event where it literally goes and takes everybody that's shorting out of the market versus everybody that's longing out of the market. So just keep that in mind. Now, let's digest that for a second. So we're sitting in a situation where we're worried. Are they going to stop increasing the rates? We're hoping that they are. Everybody's saying they are. But if they give us that surprise, we're turning into this pivot world where the real punishment might just come and the real recession might just come. Now we've got additional factors that's maybe adding to that fear, because we've got these large banks in the US currently defaulting, failing. The US also had to increase their debt ceiling, meaning that those that's holding the treasury bonds, that's getting interest from borrowing money to the US, basically the US had to raise it to pay them. And that makes the dollar something that people are going to be losing confidence in, because if I'm printing what I'm going to pay you, it means that there's no real tangible value to that. And although fiat is just that, it's there because I say so, the consumer confidence in that is that somebody isn't going to be mismanaging that unnecessarily. And with this, it raises big questions. Now, I'm sorry, I don't have the answers for you to be able to solve this whole pandemic and tell you exactly do this and this tomorrow. But the reality is these are some of the warning signs you need to be looking out for. Now, let's look at BTC and let's look at the DXY. And this is now the dollar strength index. Now, funny enough, what we're seeing is that it's turning. It's turning on the back that we created a double bottom. And what we normally see is when the DXY, the dollar currency index, is moving upwards, that is when BTC would normally retrace. And the S&P 500 would normally retrace. And the US 30, all the legacy markets would normally retrace. So it tells you that people are fleeing to the dollar regardless. So it is at the stage an area where there's so many different signals. Navigating them is going to be hard. And what I will try and do is simplify them for you as we go through the video. Okay, with a few big picture views. So just hold on, hit that subscribe and like button. I think you'll like what I'm going to show you. Okay, so with that being said, looking at the DXY real quick, to try and gauge whether this thing's going to break down and we're going to see a little bit more upside, or whether this is as good as it's going to get. Looking at the DXY from a weekly time frame, we need to be considering the following things. If I'm going to trade this, what I do have is I've got an inefficiency gap there. But in order for me to even get there, remotely start dreaming about these areas, we first need to do what? We need to break out of our current range. And what we know from formation of a trading range is that within that range, the 50% level is normally your turnaround point. So we can still have the right to be bullish on Bitcoin. Remember, I want to try and buy BTC over here. I still have the right to be bullish on BTC and thinking that it's going to move in a similar way, as long as this DXY rejects below this half level. Gets above it, it changes the dynamic of what potentially could happen. Now we open the door for more. So at this stage, this upside is not to be seen as turning the trend momentum just yet. Okay. Lastly, when we look at Bitcoin as well, what we tend to always know is that from a CME point of view, futures trading, we can see that gaps normally get full. So I've marked out the CME gaps for you guys. And as you can see, although it takes time, price always finds a way to fill those gaps. And the argument is that there's one more gap to be filled at 35K, 34K for spot price. And we have created a reason for price to go below, and it's sitting at 21K. And that is the reason why I'm speculating that smart money is going to want to buy, and I mean smart retail, is going to want to buy the 25.5. Don't get me wrong, I am going to buy it as well, but with the hope that it holds, and from that point onwards, it turns bullish. Whereas I'm expecting that, but if not, I'm going to have another go at 23.3 on the back that the CME is going to go through a major shakeout And its bounce point, that half level that we were looking at, is sitting around 23 before we can continue on. So this is giving me a different signal altogether. So just keep that in mind. Right. Let's talk big picture views. Now, I want to make it clear to you guys, I'm not a historian as such. So from my point of view, I'm going to be very vague in these things. And if you're a historian and you're really an expert in this, you're going to be able to find more and more, smaller details that you can plug into this. But it's going to be, I just want to give you a vast, big explanation of how things fit together, because I feel like this is needed for us to look at the altcoins and what we should be doing with altcoins going forward. Okay, so Bitcoin big picture. Let's get past this. So Bitcoin big picture. When we look at how Bitcoin is formulated or created as such, we can almost equate this to physics. Physics meaning you cannot bullshit the maths. 1 + 1 = 2. That's it. So when we look at it from that point of view, it takes away the fear, the uncertainty, and all those other emotions that we tend to project with us. I know you've done it. I've done it. We all fall victim to those emotions. Now, the way that it looks is once Bitcoin was created, it had a mining event where basically you've got a set of equations that runs the blockchain. And as you do that, as you help to create the decentralized nature of Bitcoin, you get rewarded by Bitcoin being released to you. And every 4 years, give or take, there's a certain amount of blocks. That reward gets halved. But the sad reality is cost to electricity and everything else keeps on going up. So as you're getting less BTC, your cost to mining it goes up and up and up. And every time you're getting less and less Bitcoin. So the argument is very simple from a physical point of view. You can argue the finer integrities of where the total is going to be and where the low is going to be. But the argument is, as long as Bitcoin's still around, by the time we reach our fourth halving, the amount of BTC you're going to be receiving is going to be less. And at the cost of mining, it's going to be more. And at the moment, I think the average cost is sitting around $13,000 to $15,000 BTC. I might be wrong. I haven't checked it in a few months, but that was the last time that I checked it. Right. So that is one thing that you need to consider. So this chart basically shows you Bitcoin's price, and it shows you the all-time highs, and it shows you where the halvings occur. Now I want to use a tool, and this is the time fib tool. So when we're looking at trying to establish a trend, the argument is, and there's two levels you need to consider, the 618 and the 38.2. Okay? So when we look at this, we see that between halvings, what Bitcoin does is it creates a high and a low. The high is around the 38.2 and the low is around the 618. So when I move this over from halving to halving, again, you'll see that the high is around the 38.2 and the low is around the 618. So this is time analysis. Time analysis is the hardest thing for us normally to comprehend because you're either on time or you're late, but time analysis doesn't exactly work there. It's kind of a big gray area around that zone. That's just the way time analysis functions. But as you can see, high is around the 38.2, lows around the 618. So from a macro point of view, basically what this tells us is, irrespective of how bad this is going to potentially be or what we feel, and irrespective of where the interest rate is going to be or whether we're going to pivot and whether the world economy is going to fall to pieces, looking at Bitcoin from this point of view, the crypto market and the way the crypto market is growing has basically created a local low. That low can be tested. The way that it's going to print, the structure is going to be unique each time, and it's going to bring its own unique obstacles that we're going to have to navigate. But realistically, from a trend point of view, we've gone through pretty much the worst of it. So take these bad news events and take these worries that's out there and everything around that, but just put it in perspective of where we are big picture. Now, something else worth noting on this is that when we look at financial currencies or reserve currencies, we see, and this is the best image I could find in the amount of time that I had to prepare for this, so I apologize for that. But we find that about around 100 years average, that's when we change the global reserve. So we're sitting in a situation where we're getting close to that 100 years, or we're at that 100-year mark. And I think we all know immediately when we're talking about that, that China is popping up at the back of our head, that China might be the next big reserve currency. And that kind of links back to the fact that things are going really bad in the US economy, in the banks, the way that they're managing the money, the way that they're printing new money, the way that they, by doing that, exporting the inflation to the rest of the world. And, you know, the narrative that we're all getting fed up about that, you know, it's, you know, what you have today is worth less tomorrow, that whole narrative that sits with it. So maybe a newer one that isn't over debt. I mean, the US literally raised their debt ceiling because they wouldn't be able to pay their own creditors, their treasury bond, you know, and so forth. So all those things that we need to consider, maybe now it's time, you know, and it might be through a war. Some of these play out through a war, but it might just be through a technological war or revolution in that sense. It doesn't necessarily have to be bloodshed, the end of the world. So these are things that we need to consider. Now, these macro trend, these macro time analysis play out in a similar fashion than what Bitcoin is doing. Meaning that if we look at the fourth halving, which is going to be in May next year, in a year's time from now, we might only find that BTC is going to top at around December 2025, with the next low potentially only going to be January 2027. Wherever price is going to be at that stage, I think that is a new debate, and that's going to be driven by the amount of adoption that occurs into the crypto world and how badly it might be outside in the legacy market side. Is Bitcoin going to be the new revolutionary product that helps save the banking industry and turning it into an industry that we might trust? Because, I mean, everybody can agree the way that it's currently running is a centralized fashion, and we're not really feeling comfortable in the way that they are managing it. So to get on that, basically I want to show you this little chart. And this chart basically explains things very beautifully. So what we're experiencing is that as we are starting with something new, let's talk banking, let's talk monetary policy. Okay, we always tend to move in an upwards projection, meaning we are trying to make things better. In that process of us trying to make things better, we tend to swing between a decentralized idea or ideology and a centralized ideology, meaning that every 250 odd years or so, we move into an area where we move into a space where the emotion is decentralized is the way to go, and then we tend to take it too far, screw it up as human nature. Then we try and move centralized. We take it too far, we screw it up, meaning centralize, abuse of power, decentralize, the thing collapses. You know, and that's what we tend to do. So now we're sitting in a situation where everything is extremely centralized. Everything is being controlled by an elite few that's fighting to keep power. And the decentralization aspect of that is that we're looking from the outside into that and saying that what you're doing isn't wrong. Maybe we don't need you. And that is where Bitcoin comes in, and what Bitcoin and a lot of the other cryptocurrencies is trying to achieve is to give us the tools to say that we do not need you to control this for us. Maybe we take it too far, but then we can at least argue that that's 200 odd years down the road until we basically find a way to screw that up as well. Okay, so with that being said, looking at this, you can see that every 200 years, we're moving from 250 years, we're moving from a decentralized idea to a centralized ideology. And that's basically where we're at this stage. So couple that with the brand new emerging of this decentralized technology, Bitcoin, in an era where we're kind of screaming decentralization, it basically sells itself in the idea that there's still a lot of adoption that needs to occur. And the risk that we take is whether the adoption is going to happen with Bitcoin and in this space, or whether something new might be developed around the road. And that's the big thing. We don't know what it's going to be, but it has to be something because something needs to change. Okay, so with that bigger picture in mind, let's maybe now look at a few alts. Okay, so I said I'm going to start with Fantom, and the idea is to take Fantom on the daily and also try and see when would retail enter the market, what would they be interested in, where would their buy signals flash, and then we take it from our side as well. Okay, so as you can see, for Bitcoin, it's 25K. We're sitting in a situation where BTC, the moving average, the 200 moving average, is somewhere around the 25K area, 26K area. So it's sitting right there. So retail's only really going to jump at trading once it's there. So looking at Fantom, one can easily start looking at this, and you don't need a degree to actually look at this from that point. That anywhere around this area would be a good buy. But this is the catch. Where's the gap? So what do I mean by gap? Remember, like I said, when price moves too fast, it creates a gap. That gap is sitting right there for Fantom. So the argument is that you want to buy that area, but your invalidation for that is going to have to be there. So although the price might move to this area around 36 cents, you need to have a look at that and say, right, but it can chop around this range for an area, and my invalidation is only going to be around 30 cents. So you need to keep an eye on that. Now, if we move to EGLD or Elron's painting a little bit of a different picture. It's saying to you that retail is looking at this and saying, maybe it's not good just yet. So your argument might be for Elron is, let's see what happens when the market reaches these lows and whether BTC bounces at 25, Fantom bounces at 35, and so forth. And you might find that Elron, at the way that it's currently trading, will not necessarily sell down so hard, meaning that it's going to keep chopping it around this area over here. Keep chopping it around this area around 40, and then only get above the 200 moving average, which will really excite the retail traders. Because remember, when we look at this from a macro point of view, this is when price really got away from itself. So a prolonged bullish stint, maybe a sell in May, go away type of scenario, where BTC shoots up to 40K, might find that there would be some sort of price action taking us to at least the 75 or the 110. Now, full disclaimer, I want to be honest with you guys. I hate talking like this and giving this type of things because it might sell the wrong narrative out. But it's important that you understand that the technical analysis does not necessarily lie. When we have a long accumulation that we've experienced around what happened with EGLD now in the chart, long accumulations normally give you a big absorption of coins, which means that you won't need a lot of money to move price up. Now, if you're a little guy owning a few thousand of them, it doesn't feel like you're impacting price, but it's everybody that bought up the bigger picture of EGLD, or the background investors, or EGLD themselves buying up, that might create that supply shortage that gives you this demand shock where price basically shoots up like crazy. Okay, let's bring back the chart. So EGLD does have good potential, but the reality is Bitcoin needs to shake itself out, and then we can look at EGLD and see what it's doing around this point. Retail will be looking at it then and saying, right, that might be their big move. And if you do get it, that's going to be the area where you need to look at. Matic is one of those that's been very strong up to late. And you can see when Matic moves, it really moves fast. There's a lot of hype around the price movement of Matic when it occurs. But what do we get? Let's quickly just mark it out and see how similar the market always is. Once you have these gaps, price wants to go and visit these gaps. Simple as that. When you have these inefficiencies, and look at Matic from the bull market as such, this is now, let me just get the right tool there. This is now the same area that I was talking about EGLD. That same area where EGLD can move towards. We don't know when, we don't know where, we don't know what is needed at the bottom or whether the project will survive long enough for that to happen. But if you do get a scenario where price is going to find a long accumulation, get above this 200 and accelerate, you might find that that reduced supply will do exactly just that. Give you that run to that sweetheart target, where I think that for most alts, your crypto winter will be as warm as it could potentially be. And that's the area where you can get out. So for me, Matic is basically done. It's done. It's duty. Fantom at this stage, looking at Fantom, look at what it's done. It's already moved to its first gap. It's done its duty. If you look at EGLD, it's not there yet. So where would your eyes be the next time round? What would you be looking for? You want to be looking for something that's been dead in the water, that's gone through a lot of accumulation, that might give you that next big punch up. That's the spot trader. That's the idea you need to think. Don't be the one jumping on the bandwagon when it's popular, because normally then it's too late. Rather trade it then. But if you want to accumulate on spot, you want to accumulate something like this that is currently sitting in a situation where there's nothing fundamentally wrong with it. It's just going through its winter and it's being absorbed. Okay. Then I said I'm going to look at Ethereum as well. Now, Ethereum, same thing. So looking at Ethereum, can you see how technical analysis sometimes can trick you into that situation where it just has to go test the 200, that narrative. But look at where the gap is. You now can spot these gaps. I've been showing you the whole day now how to get these gaps. So when we get these gaps in price wants to go and visit that. Funny enough, that's the test of the 200. So maybe it needs to go and tag it. So from a retail point of view, people might also be holding back, saying, well, I want to see this happen first before I buy again. We need people to lose. And we need to have the market at a reasonable price for them to get in to lose, meaning they won't necessarily sell the tops. People love feeling great about themselves. So selling tops is the hardest, most impossible thing to do. So you can bet on that. You need to be the one that when you feel that amazing to sell, because you know nobody else will. And that then just sit back and let the market do what it does best. Wreck them. Simple. Okay, so from this point of view, same analysis than for BTC. Also, we've got some other confluential factors. It's a quarter level, $1,500 for an Ethereum. And you can see how the market always then goes and solves itself. Look at this. Look at this. Same as Matic. Kind of maybe done its job, So it's not the time where I think this one might just now go to 3,000. I think the move's done there. Rather look for something that the move hasn't happened yet. Okay. Then I think there was the first one that was asked for is flux. So let's quickly have a look at flux for you guys. I don't know. That's not the right flux, is it? Flux USDT. Let's just make sure I've got the right. There we go. Okay, so flux in the same instance. Flux got launched at around the high of the bull market. So flux has been experiencing, yes, Matty, I agree with you. Wreck them. That's the way it needs to be. We're frenemies, So flux kind of went through a hard time because it launched and then it had all the negativity of the bull market through. So I would say almost it had an inverse bull market as such, meaning you can clearly see how price is stepping these levels down, okay? And then when there's these gaps formed, it goes and sorts it out, and then goes and finds a low. There's a new gap, it goes and sorts it out, finds a low. There was a new gap, sorts it out, finds a low. So flux, I would actually say it's the same as the EGLD narrative. It's gone through so much bad. It's so undervalued according to the indicators and according to the technical analysis. What makes it a good coin then, because you don't have a lot of drawdown. If you think about Ethereum versus where this is, I don't have a lot of drawdown to say call it quits. It goes below that level. Where with Ethereum sitting up there, that buy zone is way down. You need to stomach a lot of price drawdown and still be bullish if you want to buy Ethereum now. So I'd rather be looking at this. So Flux is really good for that, I would actually say. So I would consider getting in on Flux rather. Don't buy it now. What do we have? Although it's a small coin, there's a lot of jagged price action there. Maybe if we go to the weekly, we can find that gap that we're talking about. There's the price gap. So the argument would be Bitcoin goes 25 or 23. It feels like everything is coming to an end. And that's going to be your area where you can get in on Flux. Why? Because that's going to be as stressful and as bad as it potentially be. And your stop limit for that is going to be around these areas over here or even there. Purely because that is the invalidation. If we go below this area, that's a 50% stop. But remember, you're not going to put all your money in this thing. So you're going to take a small bite out of this. That's the way you should look at it. But if it goes below that range, what is it going to do? It's just going to keep trending in a similar fashion that BTC and everything else goes. It's going to find a new lower low. It's going to find a new accumulation, and then it's going to have another try at it. So why hold it all the way down? I mean, I'm over-exaggerating these lows now, but you get the idea. Okay. Let's do one more. We're 41 minutes in. Let's do Rune. I see there's a comment for Rune. Let's see who called it. Machu Picchu, Rune. I probably abused your name, but I apologize. My intentions are kind behind those words. Looking at this now, let's go back to the daily time frame. Same thing. We're going to get to a point where these things are going to start kicking off. Rune has yet to do its move. We sit in a situation where you have all these areas here where price is checking around that range. And when we sold off, we had a big gap around that area. So give Rune enough fuel and give Rune enough interest. It will quickly accelerate to these areas. And that's going to be your take profit. You need to be scared that you're losing out on taking profit there. You need to be scared that you're losing out on taking profit there. But the beauty of this now is, look at this. Where do I need to be scared that I'm going to be sitting in a project that's going to die? There. So now the risk to reward upside on this is much higher. Because I don't have a lot of risk I need to carry for the potential that it can bring. But we need to have the right market structure. So maybe Bitcoin needs to now go and die down and screw with us. Maybe it needs to go below 25 and 21 or even there. That might need to happen. But what we know is then the next move might be the area for these coins to shine. And then I want to end off with this. And it's normally the way that money flows within crypto. New attention, new money finds its way to the crypto market historically through Bitcoin. It's an easy, safest gateway to get in. And then once profit is realized on Bitcoin, we'll have a second wave that normally takes its attention to altcoins, meaning that those more risky but with higher speculation reward coins now get the interest. So they tend to outperform BTC. Currently, we don't have this. Bitcoin is the daddy. It's just the stronger one of everything else, generally speaking at this stage, okay? So when that happens, the next run, that might be when our attention is going to be, I'm looking at Bitcoin, but I'm buying an alt. Meaning Bitcoin will break out, but the alt will outperform BTC due to the fact that it really got left behind now. Its accumulation has now occurred. It's been absorbed, and there's very little supply on the open market, so it can move fast. Okay. Then thereafter, we tend to then diversify further, and the micro caps and all the other alts, excuse me for the generator in the background, my family just got back, those then tend to move. And that's when your small coins really go ballistic. And that's normally around the end of a bull market, when everybody says you can basically just select something from a list and buy it and sit 2 weeks and you'll have profit. And then the whole thing resets itself again. Everybody dies, everybody cries, that type of thing. And then Bitcoin finds its feet, slowly builds back the trust, brings in new money, then that money diversifies, and so forth and so forth. That's how the cycle works. Until it changes trend, that's what we need to do. Okay. I see Kun's asking for link. I'll quickly do link for you. And I think then we're going to call it. Guys, if you've got any other questions or any other questions relating to what we spent today, especially around the FOMC, or maybe you have some thoughts on it, feel free to leave me a comment in the comment section. I like to look at them, read them, and just answer whatever my feelings is around that as well. It's nice to have an idea of where you guys are at as well. Let's swap the screens around before I continue. And let's talk. I think we're pretty much done through everything. So let's quickly then just talk. What was your coin? Let me just get the name. Link. And then we're going to talk Copytrade. Link. I don't have link here. Let's just link. I'm going to take it on Binance. Okay, so first things to understand about Link as well, guys. Link is an oracle, so a lot needs to happen on the crypto space, and they need Link for that. So you do have Link it's the same as Charlie 3. It's kind of a foundational stepping stone that is needed and will be used in the growth. So these really perform when there's a lot of new market or network activity, and that's when they really shine because people need those oracle services. Okay, so just keep that in mind. So with that being said, when we have a bear market, projects dying and shit falling to pieces and people going through scams, projects like Link, Charlie 3, they won't necessarily do well because there's not a lot of use case for them now. So we need them to go forward as well. We need the market, the crypto market in its entirety, to move forward. So you might be sitting in a situation where when we look at coins, around the end, your interoperability coins are going to do better. Then when we're in the mid area, your security coins might do a little bit better. And that's where those categories come in. So Link is in the Oracle category. So my opinion just on this, and I might be wrong, is that until we get that hype of a next technological, I wouldn't say technological, I would say a development bubble, your oracles are not necessarily going to perform that well. Just keep that in mind. Okay. So that being said, when it's going to go, it's going to do wonders because look at where Link is at. Look at where these areas are and look at where price really got away from you. Around there and around there. So those big gaps will potentially get filled and quite quickly. So Link can be really profitable when that happens. But there's a lot that needs to happen for that. Remember this now. Okay, and then lastly, why I like this one, and why I would say this is a really good coin to buy and hold spot on. Because where's your invalidation? Your invalidation is sitting right there around $6. Because if it goes lower, what can we expect? Well, Link trading below this trading area for a time and then getting above it. So then I would rather want to save myself that drawdown, however big it's going to be, and then get back in it when it creates a new range low and then trade it to the upside. Okay. Is it a solid dollar cost average coin at the current price? Yes, because from a dollar cost average point of view, what we normally see, and let's use Link. This is a brilliant coin because it's gone through a couple of cycles. Let's just ignore all these lines. I'm just going to quickly clean this as quickly as I can. Okay. What do we see is when we have a long accumulation, you'll have a good run to the upside. And that retrace area is starting from the 786. That's normally when your FIP retraces back, 786. Once you create that low, that is, as they would say, your ideal dollar cost average range. Meaning you want to buy. You don't want to buy today and tomorrow. You want to buy there and then 3 months later buy when it's there again and so forth. when it holds this level. And then normally from that point onwards, price moves. Now, big picture wise, we can argue that this is now that same long-term accumulation that's experienced over there. And when that happens, what do we get? So I'm going to take that fib and move it from there to there. What do we get? Close to the 786. Things are a little heated there, but that is normally when the buy happens. So when you have these crazy runs, that's where you need to start looking at it. So you don't need to complicate things. Remember, you're not trading, you're dollar cost averaging. That's all you want to do. When it goes ballistic, you sell, and when it comes back, you buy back. That's it. And then going through this again further on. Look at this big picture now. There we go. And look at where we're sitting at. This thing is undervalued as crazy can be. Okay, so just keep that in mind. Now let's talk copy trade. I want to talk to you guys about the copy trade. So, like I said earlier, video sponsored by Prime, and I copy trade on PrimeXBT for you guys. So basically, you can head over to Prime, check what I'm doing there, and the nice thing is you can go and have a look at my trade history. So you can see everything I do, when I do it, what time I do it. Sometimes it's like 4 in the morning, 3 in the morning, 5 in the morning, whatever the case might be. I trade as I would trade my own money. Realistically, my own money is in it. And I've got 2 accounts. So it's this PPE account and then the one for this month. So next month's copy trade account is going live. So you guys are more than welcome to sign up for that. All you need to do is just go to the Discord and create a new Prime account, fund it, and you'll get validated if you click on this sponsorship PrimeXBT channel. All you need to do is just do that. So then you get into the new account. And basically the way that the copy trade account is going to work now, or has working, is I shorted that range there and I'm holding for 25K. Once that happens, the profit realization would potentially put this account at break even, okay? And the narrative, if I'm wrong, my long where it's at now, if it goes to 34K or 40K, is going to do exactly the same. Now, the same is for the one that we have now. I've positioned myself in a situation that the original target, the market didn't quite give it to me in the size that I wanted. I wanted to take a big enough position, but it just slipped away from me. Trade. We're busy. We all get stuff that keeps us away. And the positions that's currently in that one is going to do the same. So when that one matures, when we hit the TPs on those, that would potentially still give it the 30%. So the new account, I only started trading around the 17th on last month's account. I should have started the 1st, but we were chopping like sideways like crazy. So the new account's just going to fall on the 17th again. So now you have an opportunity to start getting ready, create an account, fund it. I'll send you the name and you can get ready for the next copy trade account. That one, however, will be terminated within the next 2 weeks, around the 15th of this month. Then I will terminate that one and the stats will be made available to you guys. You can just check it out. Okay, so that's everything, guys. Remember, in trading, the reality is that there is no guarantees in trading. Trading is one of those things where we try and plan and mitigate the risk and try and get above everything, but I can screw up just like anybody else. So please practice some really good, responsible portfolio management. Don't throw all your money in, because I'm definitely not trading with all my money. Simple as that. Okay, guys, you have a lovely day. Head over to the Discord if you want a little bit more information as well about what I want to trade, when I want to trade. I do share that on the Discord. If you just want to chat with me as well, I am active in the Discord. And Shifu Lee, or Lee Shifu, I got the name wrong, I think, is going to be back soon as well. So looking forward to that. So all those dropping off saying that there's no Lee, we're getting him back. He's just going through a few things that will actually surprise you once he's back. Okay, you have a lovely day, guys. And as always, keep hustling.